Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. The last time we spoke was before this war in Ukraine began, and the whole world is dramatically different, that's for sure.
Well, commodities for sure have really caught the attention. The trading of nickel halted by the London Metals Exchange because some Chinese tycoon decided to short some $8 billion worth of nickel. And so right there you have one huge wrench thrown in to the world's market. Without nickel, you can't have stainless steel, which is so key in so many construction projects, and just your frying pan even. So, Mike, what's your take on all this?
Well, a way to kind of sum up what I think is going on, the other week, while the invasion had started, I took a little vacation. I was playing poker out of town in a casino, and there was a man sitting next to me in his 70s, probably close to 80, and everyone else at this poker table, they were in their 40s. And I was pulling up my phone and showing the man next to me, the older man, what the stock market was doing, and it was falling. And he said, "Oh, Facebook is just falling every day." And I said, "You're right. It's a total debacle. It's a disaster. It gapped down 20% in January. It's not an earnings company. The revenue's not growing, and so forth." And I said, "Is it hurting you? Are these stocks falling hurting you?" And he laughed and he said, "No, it's not hurting me, because the last time I was in the stock market was March 2000, and I never got back in ever since." And he told me that he had spent the years after that investing in real estate, and apparently, has made a lot of money in real estate, a fortune perhaps. But the thing is, I told the guy, "Well, this is like a mishmash of the summer 2000 top and then the 1970s with the high inflation. Of course, the prices have just been going up and up even since that 2 weeks ago. Oil is just over $100 a barrel now, closer to 130, and there's no reason to think it's going to go down to what it was in December." But the thing about this story is that he got up and left, and I went to the bathroom and came back and started talking with the other people at this playing cards here, and someone said, "Oh, don't worry about the market. It always comes back." And everyone else there was extremely bullish on the market. The idea, these technology stocks are being cautious. They just dismissed it. It always comes back. It always comes back. Well, I just said, I don't think it's going to come back so easily this time. You can have bear markets and that wipe people out, and that was all I had to say. They didn't really want to hear any of that. And the point of this is that age bracket of someone being in their 40s or 50s and interacting in the financial markets, I think most people that do, it's different now because of this Robin Hood effect and people getting these money payments from the government last year after the lockdowns. That did bring young people into the market, but typically it really isn't until someone is in their late 30s, in their 40s, that they have the money to try to trade or, speculate in the markets. That's historically the way it's been. And the experience of the older man is, if you look at the years that went by, he was in that age bracket, 40 or 50, when he got hit by the NASDAQ stocks and gave up. And all these other people, they're in that age room, but they don't have the experience of a real bear market like the older gentleman did. And if you go to the 2000s, the 90s, it wasn't, there was the 87 stock market crash, but most people that was in the market in the year 2000, they got in the market in the 90s. So that what's going on now is very similar. The people in the market, buying stocks, trading stocks, they weren't in the market in 2008. They have no memory of, they weren't in the market in 2000, so they never really experienced what a real bear market is. They much less have any knowledge of how you could have made money in the 1970s. So I think that's where we're at. I mean, in real life, you can see oil prices going up, inflation is hitting people at the grocery store, but the person in the stock market, they have no understanding what a bear market is. They're not making any changes to stop losing, much less start winning. And I say that because you can look at the top 100 Robinhood stocks, most owned, and there's only 2 energy stocks on the list. It's all the same, stocks that always been on there the past 12 months. Fidelity, I've discovered, has an interesting section that shows you the most transacted stocks in the day with the ratio buy and sell orders. Tesla and Apple and Rivian are almost always at the top of that list, and these are just buying. The lopsided ratio there, even though the market's been falling since New Year's, we're in a bear market. It's trading below the 200-day moving average, but the people in the market, they're just trying to keep buying on down days and not really. I don't think the bear market's gonna be over till these people stop doing this, and I don't know how long that's gonna take.
With inflation running rampant in the U.S. now, 7.9% officially, which of course we know it's probably more closer to 15% if those are the official numbers. Are there trades you can make to take advantage of this?
Oh, I mean, for sure. And that's what's kind of sad is, like I said, in the Robinhood thing, and Fidelity, they're not buying energy stocks. I mean, energy stocks are doing great. Commodities going up. There's funds that invest in commodities. I think I said last time on with you that I thought in January that the single best trade anyone could make, from an entry point and an investment payoff, if you're going to hold, was gold and silver, because gold and silver, although oil, had been going up quite a bit and it's gone up even more, gold and silver was still fairly close to its lows of December. And even now, with gold roughly $2,000 an ounce, you're really looking at a possible 100-point downside. And I really doubt that's even going to happen. So I think you got, in silver's the same story. I think it's not too late to invest there. And while many of the big cap mining stocks, they have made large moves in the last week. Newmont, for example, made a new all-time high. To me, it looks like this is just the start of, a big rally that could last all year or longer for mining stocks. But when these rallies start, historically, the big cap miners move first, and the smaller ones don't get a bid for a few weeks later. So for the most part, small cap mining stocks haven't really taken off yet, but I think they will. at some point, within the next couple of weeks. I think there's still a great entry point or a buying opportunity in them, but once they take off, they're going to take off and run away from people. So other than that, it's basically being patient and waiting for this downtrend in the stock market that started around New Year's to end. And I had no idea, if that's going to take months to happen or several weeks. It's just have to be patient on it.
There's an ad on Canadian television by TD Bank where they feature this young fellow, obviously in his 20s, who says to his friend, I don't know anything about investing, but everybody's saying I have to invest. And his friend says, well, here, look, there's an app on the phone you can get from TD Quest Trade or whatever. And you can get in there and just start playing the market. It's like a video game. To me, that's the equivalent financially of offering a 5-year-old a loaded handgun. You don't need any experience in trading. You don't have to understand to do it.
Well, that's what people have been enticed into thinking, and that has brought all these people, in the market that we're talking about. They're not doing anything different. They're losing and losing double. They're buying stocks that are in sharp downtrends, and they're not stopping. They're not selling them, and they just keep buying more overall in aggregate. And I think it's part of the reason is what you're suggesting, that you're ill-equipped. An app that only shows you price quote of the day, the change of the day, and lists of stocks that other people own. That's not enough information to make any meaningful decision in the markets. You're just doing what everyone else is doing, which admittedly, on the way up, that's okay. I mean, it can work. You'll as long as you get out and are lucky enough to get out before it stops going up. But on the way down, it's a disaster, and it doesn't give you any notion of, is this a good investment? There's something worth holding on to. I mean, there's just no information. So, what was the hot story, 14 months ago was AMC and GameStop, and Dogecoin was one of the most searched terms on Google for all of 2021. And these are two companies that have awful fundamentals. The stocks have been falling ever since they got mass attention in January of last year. And Dogecoin is Dogecoin. It's just something silly. But it's a matter. One thing about the markets is, I read a long time ago some book about trader psychology. It made an interesting point that the financial markets are, I think he called it an open environment, meaning that they give the person a chance to do whatever they want. They can take as much risk as they want or as little risk as they want. I could go and margin myself 100 to 1, with futures contracts and go completely crazy, or I could just put my money in a CD and not expect to lose anything or make anything. Or you can be a long-term investor. You can choose how you want to do things. And the app, I think, directs people to make herd-type behavior when there's so many better things one can be doing. Look for what most people are not. If you want to get early in the trend, when everyone is talking about something, as they were doing with GameStop and AMC in January of last year, then there's just not that much upside potential to it. There just isn't.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, will the Fed have the guts to pull the trigger on higher interest rates?
Well, I think they will. The one reason, inflation is so high and interest rates are zero, they have to. It's a crime that they haven't done it already. It's just the longer they keep them low, the inflation's just going to grow and grow. In the 1970s, that's really how far back you have to go to see inflation data like we're starting now in the U.S. and Canada. But when inflation started then, you had rates over 5%, and now it's zero. So they've got to, and also they follow the bond market, which has been falling. So in the 10-year Treasury bond yield is today over 2%. The bond market's declining, and the Fed tends to just follow what the bond market is doing. So I do think they will raise, but the problem is, will they raise enough? I heard someone really knowledgeable say that they heard two Federal Reserve officials say that they would raise interest rates as long as the S&P 500 doesn't fall 30%. If it's down 30%, they'll stop. Well, the S&P is about down 15%. So 15 to 30, how many rate hikes can they get in that amount of time? I don't know. And then, the economy seems to be slowing down. There's a Fed fund, the Atlanta Federal Reserve branch, they do projections of GDP growth before the official data comes out, and they're projecting less than 0.5% GDP growth in the U.S. in the first quarter. Well, that means we completely stalled out, or you could say it's stagflation. Growth is less than the rate of inflation. So, the Fed's going to have to deal with that, which is more of a problem, I think, than overvalued stocks falling a little bit. So it's a real mess. They need to raise rates much higher. Really, we need rates at 10% to stop this inflation, but I don't think they're going to be able to get them but barely off the ground before they'll stop because of slowing down the economy or the S&P falling. But so it's a mess. It's pretty bad. The macro environment's pretty ugly, I would say. Probably the worst it's been. It's different. It's different when I say this. It's not trying to suggest it's similar to 2008. Well, I shouldn't say similar. It's a bad of environment because of all these problems we got. It's not the same or similar because 2008 was a real estate bear market and banks going under because subprime securities were worthless. So none of that's happening. In fact, I actually think real estate's one of the better investments one can make because it's a store of value. Unlike Dogecoin and crypto, real estate is something in the real world that historically goes up with inflation because if you own, say, a house and you're going to rent it out, you can raise those rents. If the rate of inflation's high, can't do that with a Dogecoin. You can't do anything with it. Can't even eat it. So that's the type of investing I think people need to think about. And I'm too lazy to do real estate in the real world, but I can own REITs, and I do, and I can own energy stocks that profit from inflation and mining companies and so forth. That's what people need to think about. You asked the question earlier, what investments will go up in times of inflation? Focus on that. Ignore the Dogecoin and ignore Tesla's. Tesla is in big trouble because, as you mentioned, the price of nickel was halted. Well, nickel's a component in these Tesla cars. They're going to report a disastrous earnings report. If it's not this one and somehow they do magic with the numbers, it'll be the next one. But their costs are skyrocketing. And that's, a mess. And think about that problem, same sort of problem with other companies that have skyrocketing costs, but not the ability to jack up prices as quickly as you can, other companies can, or that directly benefit from higher prices, such as, again, that energy companies do, mining companies do, and so forth. That's what people need to focus on if they want to make money.
You know, a few years ago, I read an article about a car that ran on compressed air. I wonder if they're going to revitalize that with gasoline going for $6 a gallon in California and $8 a gallon in Vancouver.
Well, if it's possible, I mean, it's kind of funny. I saw a cartoon of the Flintstones car, that from the cartoon, I almost put it on Facebook and made a funny comment about it, is that here's the future car. It doesn't need gas. You could just pedal it.
Mike, thank you so much for chatting with us.
Thank you. Good talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.